Hey, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue our structure series, guys, last video we talked about the monthly chart. And so now let's go ahead and break down the weekly and the daily chart. And those are the three major time frame, guys, that we're going to look at in the structure series, which is monthly, weekly, and daily. So we're using the same pair as we did last video. So Euro USD on the monthly chart. These are the major structure points like we talked about in the last video. So now let's go ahead and add some more structure points, but this time we're going to add them from the weekly standpoint and if any from the daily. Here we have the same Euro USD pair, but this time on the weekly chart. Now, the white lines are representing essentially structure points from the weekly time frame. So the blue lines are the month, the white line is the weekly, and then I even added one line here, which is the red line. The red line is basically from the daily structure. Now, if we go to the daily, and I had to go all the way back here to even put this on, just to put anything on here. This was all the way back from like 2000 to 2003. Basically, this rejection right here. And then these rejections right there. So that's where that red line came from. The red line represents the daily. Now, I only put the daily on because that is where current price action is right now. Okay. So when we look at it from going from the monthly to the weekly and daily, remember when I talked about putting everything together just from the monthly standpoint of, hey, this right here is breaking major structure that is a monthly major structure and it's pulling down. Now, if you look to the left, where is it likely to go? Well, ultimately, we feel that it should start to work its way down, to this very bottom. The question is, how long is that going to take? And who knows how long that's going to take? Right? So we have to look at it from the smaller time frames of weekly and daily to get an idea of what other places could we possibly stop. If we can break it down further into smaller chunks, we can go ahead and trade it successfully and break it down smaller. So we broke it down essentially from the blue line to the very bottom here, the 2,000 pips or so. Right now, if we go to the weekly, you can see where we've broken down that 2,000 pips into smaller sections. And that's the whole point, is to break it down into smaller sections that are more manageable. Okay, that are more manageable for us to actually trade on the smaller time frame. Smaller time frame meaning 1 hour, 2 hour, 4 hour, whatever time frame you want to use. But you're basing all of your trades off of the higher time frame. If we take a look at the weekly here, we can see price action had a reaction at this weekly structure point. And now we're essentially moving kind of sideways or consolidating between a monthly and a weekly standpoint. Okay. Now, if we go down to the daily time frame, you will see that we can break it down one more further on current price action, and that's basically the daily, and that's the red line. All right. So what are we looking for from this? Well, obviously the higher time frame tell us that we're very likely to continue to look for sell setups. So as you can see, we had a huge sell-off, and then what happened? We had a retracement, right? A retracement back where? Back to the monthly, right? If we go to the monthly chart here, is that retracement here visible at all? Do you see that retracement here on the monthly? You don't see it. All you see is straight red candles, right? But if we go down to the daily time frame, you could see a clear retracement going back to retest that monthly. So what does that give us as far as trading this, right? If we're looking for sells, how can we trade this? Well, just by looking at this structure right here, we could use simple tools like, let's say, a Fibonacci to give us very likely structure points of where we could see this. So if we take a fib, and let's just say we see the break, we went back to retest. Okay, now the next move, right, was basically from this weekly point down to the monthly again, right? Well, this one move here again caused a retracement, right? So the retracement here went where? To the 50. Okay, 50, 618, these are all very good points for entries on potential swing trades, right? So if you're looking at this, this gave you a very good entry opportunity here to sell off, because again, we're going off the bigger time frame that tells us that we're looking for just sells. We're just waiting for essential retracements to occur. Okay, so this could have been one example here of an entry. All right, another one would be, let's say you go from this, you see the breakthrough that we had past the monthly right to the weekly, and then what happened again? Another retracement. So we can take another fib from here and then spread it down to here. What happened again here? Well, we had, again, price action went up and retested that monthly structure point. Well, that monthly structure point goes right with the 618 and then also the 50 as well. So that could have been another entry point for you again for another selling opportunity. When you have a trend that's on the higher time frame, right, and it gives you, let's say, that directional bias like the monthly does here, like this, there's going to be retracements that you can take advantage of, okay, and that way you can continue that trend. Because on a monthly, this is probably going to look like it's all red candles, when the reality of it is it's not all red candles, because you could see it right here on the daily what's been happening. And you can literally do this over and over and over again. Okay, here's another one right here where you're coming off, you're bouncing off of a weekly structure point. You make a strong move and then you have a retracement. Well, if we do that again, pull out the fib, where does it go to? It goes right to the 50 again. That could be an entry point for you, and then you could sell off. I mean, you could literally do this all the way down, right? Here's the top of the retracement, goes down. So you could essentially fib it right there. Where does it go to? The 50. So you can literally go all the way down and keep doing this all the way down. Okay? And this is just off of the daily, by the way. This is just off of the day. This is not even going down to the 4-hour, 1-hour time frame, which you'll see the retracements are much bigger. Okay? If you go down to, let's say, a 4-hour time frame, you can see the retracements are going to be much bigger. So you could do this on a smaller time frame. I'm just doing it solely based off of the daily. Okay? The higher you go on the time frame, obviously, the more it contracts price action and it gets rid of a lot of the noise. That's why I like the higher time frame. That's why I like the daily. Why do you think market makers, institutions like the daily time frame, higher time frames? This, all we're doing, guys, is we're writing. Think of these lines here, these points of structure, as like train station stops. Okay, the train being price action is just going to the station. Okay, once it breaks some major structure point like a weekly, we can expect price action to come down to the next weekly structure point, because we're solely basing it again off of the monthly chart where we're seeing price action break through. So because of that, we can anticipate that the sell-off is going to continue. But of course, you don't want to sell it down here. No, we want to sell it from the retracement that we get, because we know that price action is going to retrace. That's what price action does. It cannot go straight down without retracing it. It just can't go all the way down 2,000 pips. Although when you look at it from the monthly, it looks that way, but it's really not, because we could see it here on the daily that it's not going straight down. It's giving us retracements. Those retracements are what's giving us our opportunities to jump on this bigger trend that's happening on the month. That is literally, guys, that's all you're doing, is you're grabbing the major structure points from the monthly, weekly, and if there are some on the daily, grab it like this, right? This particular one I didn't have to put on there. You could delete it if you want to, because there's no real, current structure point that you could use for, let's say, the daily right now, right? That might be different on a different pair like GU or AUD, USD, or whatever the case may be. But for right now, there is really no need for a daily structure point, because everything is going pretty damn good, as you can see, from weekly to monthly structure points. And so that's all you're doing, guys. You're literally just doing that. And this is a simple way that you could trade if you wanted to just trade off of the higher time frame. Now, when you're trading off of the higher time frame, things that you have to consider is that, for obvious reasons, you're going to have to put much higher stop losses, right? So we're not talking 15, 20 pip stop losses. We're talking about stop losses, in the 60, 70 pip range in some of these pairs. So be aware that the swing trading thing sounds great, but you're also going to have to put in a lot of risk in the sense of your stop loss. So the one way to negate the amount of risk that you're putting by the 70 or 80 pip stop loss that you have is you get to control the actual lot size that you put on your trade, right? So there's two ways that you can control your risk. One is by the stop loss, and then the other one is by the size of the lot size that you use. So if you know that you're having to risk more because your stop losses have to be big, then that means that you have to control the lot sizes to be lower to preserve your capital. Because all we are, guys, preservation of capital game. Okay, because without capital, you can't trade. All right, so just keep that in mind when you're using when you're trading the higher time frames like the daily time frame. That, it looks great, but you're going to have to risk more of your stop loss. And so you're going to have to use a lower lot size in a lot of those cases. So just keep that in mind. Also, keep in mind that when you're looking at this, okay, we really want to focus in on the most current price action. Okay, we only want to look back to the left when we need to find some sort of structure, because we may not have any, right? So when we get down and we see this big gap right here, right, we want to look to the left to see is there anything smaller where price action is going to stop at, okay? Because that's a pretty big gap right here that we have. Right, it's about 1,200 pip gap. So if we could find any kind of structure to the left that could possibly help us as far as when price action will likely stop somewhere, then we can use it. Okay, so just keep that in mind. But for right now, we don't need that structure until price actions comes down to this area. Right now, we're not needing that, because we're not near that yet. Okay, but once we get into that area, then you're going to want to start to use previous price action to help us find some kind of structure, because we know that it's not just going to go straight down. We know that it's going to have retracements, and we want to see what are the likelihood places where the retracements might happen, so we could go ahead and continue the longer trend that's happening here based off of the monthly chart. All right, guys. So I hope you enjoyed this video, guys, of the weekly and the daily, and also using some simple tools like Fibonacci to help us find entries within this particular pair. Guys, if you like this type of content, please give me a like, subscribe to the channel, and we will see you soon with the next video. Thank you so much. Trade safe and trade consistently, guys. Guys, if you need more help with our strategy, or you want to join us in our next class, we are hosting our first master class coming up on August 22nd. This class is probably going to be the best class out of all of them because of the material that's brand new that's being released in this class. All of the new material being released is years of backtesting data that we've been collecting over the years that have helped us determine what are the best things about the strategy, what are the best patterns, what goes into the best patterns. Everything you could possibly think of is going to be in this masterclass. So hopefully, guys, I hope that we will see you in the next masterclass. It starts August 22nd. The link is in the description. And like always, guys, trade safe and trade consistently.